Investment, money put into something to make a profit. She made an investment in stocks to grow her savings. Profit, money earned after expenses are paid. The company's profit increased after launching a new product. Budget, a plan for how money will be spent. They created a budget to manage their monthly expenses. Client, a person or company who buys services or products. The client was very happy with the new design. Contract, a written agreement between two or more parties. He signed the contract to start working with the company. Revenue, the total money earned by a business. The revenue from last year's sales was very high. Expense, the cost of something. Their main expense is renting office space. Debt, money that must be paid back. She has a lot of debt from her student loans. Equity, ownership in a company or asset. He bought equity in the company to become a shareholder. Assets, things of value owned by a person or company. The company's assets include buildings and equipment. Liabilities, debts or obligations a company has to pay. The company's liabilities include loans and bills. Balance sheet, a financial statement showing a company's assets and liabilities. The balance sheet shows that the company has a lot of assets, but also high debts. Stock, a share in the ownership of a company. He bought 100 shares of the company's stock last month. Bond, a loan given to a company or government in exchange for interest. The government issued bonds to raise money for a new project. Dividend, a portion of a company's profit given to shareholders. Shareholders received a dividend for the successful year. Capital, money used for investment or business purposes. The company raised capital to start a new product line. Forecast, a prediction of future business performance. The forecast predicts a rise in sales next quarter. Revenue stream, different ways a company makes money. Online sales became a major revenue stream for the company. Gross profit, profit before deducting expenses. The gross profit is calculated by subtracting costs from sales. Net profit, profit after all expenses are deducted. After taxes, the company reported a net profit of $5 million. Cash flow, the movement of money into and out of a business. Good cash flow helps a company pay its bills on time. Return on investment, ROI, a measure of profit from an investment. The ROI from their advertising campaign was 20%. Shareholder, a person who owns shares in a company. The shareholders voted on the new company policy. Valuation, the process of determining the worth of something. The valuation of the property increased over the years. Market share, the percentage of a market controlled by a company. The company's market share grew after their new product launch. Merger, the combining of two companies into one. The merger between the two firms created a larger business. Acquisition, one company buying another. The company made an acquisition of a smaller tech firm. Franchise, a business that allows others to sell its products or services. He opened a franchise of a popular fast food chain. Outsourcing, hiring another company to do tasks or work. The company outsourced its customer service to another firm. Supply chain, the process of producing and delivering products. The supply chain was affected by delays in shipping. Marketing, the activities involved in promoting and selling products. Marketing plays a key role in growing the company's sales. Advertising, paid promotion of products or services. They use social media for advertising their new product. Negotiation, the process of discussing terms to reach an agreement. He was skilled at negotiation and secured a better deal. Invoice, a bill for goods or services provided. She sent an invoice for the consulting work she completed. Purchase order, an order from a buyer to purchase goods or services. They received a purchase order for 1,000 units of the product. Supply, the amount of goods or services available. The supply of raw materials was delayed due to the storm. Demand, the desire for products or services. There is high demand for the new smartphone model. Risk, the possibility of losing money or facing failure. Every investment involves some level of risk. Liquidity, how easily assets can be turned into cash. The company's liquidity is strong because it has a lot of cash. Inflation, the increase in prices over time. Inflation has caused the price of goods to rise. Recession, a period of economic decline. The country is facing a recession due to decreased consumer spending. Diversification, spreading investments across different areas to reduce risk. Diversification helped the company avoid losing everything when one market dropped. Startup, a new company, usually with innovative ideas. He joined a tech startup to work on developing new apps. Entrepreneur, a person who starts a business. She is an entrepreneur who opened her own fashion store. Franchise fee, the cost to buy a franchise license. The franchise fee was $50,000 to open the new restaurant. Sustainability, meeting the needs of the present without harming the future. Sustainability is important for businesses focused on long-term growth. Business model, the plan a company uses to make money. The subscription business model works well for many online services. Intellectual property, ideas, inventions, or creations protected by law. The company holds intellectual property rights for its new software. Tax, money paid to the government from earnings. He filed his tax return to pay for his business income. Strategy, a plan of action to achieve specific goals. Their strategy was to enter international markets to increase sales.